If you're thinking of investing in the stock market at this time, I would say that you watch this video because I believe the information I'm going to share with you will help you in deciding how to invest, and hopefully you can save yourself some headache or some stress. If you're new here, welcome. If you're a returning subscriber, thanks for clicking on this one. One of the things that I would like to start with is there are two main reasons that are impacting the stock market right now. And as we know, the stock market doesn't like unpredictable situations. And we have two situations that are making it very unpredictable. The first one is the dock workers strike, and this is something that we don't know how long it's going to last. I mean, the union wants more money and they're negotiating, and of course the stakeholders doesn't want to pay more money, and you get the point. The point here is if this continues to drag on, it will put a lot of weight on the stock market, dragging it down. Why? Because the economy becomes very unpredictable. Things are likely to get more expensive. And of course, you see, your goods and services that you're able to purchase can become scarce. And if it becomes scarce, then what is available becomes pricier. So it's supply and demand concept. The second thing that I believe can make the stock market very unpredictable at this time for a long while is the situation with Iran and Israel. Now, as we know, that situation has been ongoing for a long time, and it's always, it has ebbs and flows, and the times things are escalating to a point where you think the war is about to break out. But at this time, the war is ongoing, and yet we're hoping that it doesn't become something that is, that brings major economies or major countries into conflict. We already know we have some subtle situations. The US with Israel, we have the China-Russia situation going on, and tension is rising everywhere. And the point here is you want to be very careful because the stock market is very sensitive to those situations as well. So if you have $1,000 you're thinking of investing right now, what should you do? Well, simple. See, when it comes to the stock market, we are often looking for opportunities to buy. And what I'm going to tell you is, if you have $1,000, first thing you want to do is make sure you're not trying to time the market. That is one thing. But then the second thing I also want to say is look for opportunities though. And what that means is that when the market is on sale, you want to buy those companies on sale. And what makes it very difficult for new people or new investors when it comes to picking companies is, okay, what company should I pick? Is this a good price? Is it too expensive? Because a lot of people fall into the mindset of, oh, a company is selling its stock for, let's say, $150. Oh, it's too expensive. Another one is selling its stock for $400. Oh, it's too expensive. That is not what you want to look at. You really want to understand the price action that has been going on with that stock. So personally, what I do is I look at the chart. Okay, I look at, okay, what has this stock done? If it's worth $400, how has it performed over time? Is it just, recently gone to $400, or is it back from high points? And if I know that it's drawn down due to these factors like, the situation and tension rising in different regions, and or the workers are going on strike, then I know that this is an opportunity to buy. But by how much is the opportunity? Now, sometimes I'm looking for things that are on discount by 5%, 10%, especially if it's just related to the news, all right? This is just a reaction to the news. That is very important. And of course, the more discounted the price is, the more I want to go in. Now, if you're worried that, okay, you may still not get it and you may get it wrong, this is where I recommend buying ETFs, exchange traded funds. These funds are usually holding, hundreds of companies. And by picking a decent fund like VTI, VOO, these companies would track different companies. Some of them track up to 500 companies, some of them track up to 3,000 or 4,000 companies. So the point here is find ETFs that are reliable, that are affordable to you. So if it's VTI, if it's VOO, pick one of those and invest slowly. Now, why do I say slowly? The reason is because your $1,000, you want it to go far, and you want to be able to capture the market at different price points. So if the market goes down by, let's say, 1 or 2%, and the ETF is down by 1 or 2% as well, then maybe it's time to put in $200, okay, this week. And then you may wait it till maybe the end of the week, or maybe you wait until the end of next week, and you invest another $200. The point here is you want to be able to capture the market as it reacts to this situation. But one thing you don't want to do is to sit on the sidelines for too long waiting for the perfect moment, because you will never get a perfect moment right. Today the market is up, tomorrow the market is down. And hey, unless you're sitting watching the stock market like a hawk, then you would miss great opportunities. Another thing you can do is you can set the price that you want to buy these shares. So if you're thinking, okay, well, your prediction and your judgment and your reasoning tells you, well, the stock market is likely to go down even further, and let's say the VTI is about, if I'm correct, around 520. I'm not sure about that. It's a VOO. One of them is 520 right now anyway. Well, if you want to buy it at 510, you can go in and set a limit order that would let you buy at that price. So you can just set it and leave it, because hey, I have a job, you have a job most likely, and you're busy day to day. So you're not sitting down watching the stock market. But in order not to miss those opportunities, I set it at a price that I believe I'm willing to pay for it at a bargain, and then I let it sit. And like this morning, I was able to pick up, I believe, VTI and company like Coca-Cola because they went down. I bought Chipotle because they went down. These are companies that I like and I see value in them, and I set a price that I'm willing to buy them, and I just let it be. And when it hits those price points, it executes and I'm happy I'm in. Okay? And of course, you look for the next opportunity. Remember, the stock market is there for you to make money, and the hope is that when you invest right and you're getting at a good price, you're able to make quick gains, and hopefully you can repeat the process and let it stay invested for a long time. If you found value in this one, check out my next video. I hope you find value in the next one as well.